you have a solid trading plan. You know your entry triggers, your exits, and your risk limits. But then the market actually opens. You miss a perfect setup because you're asleep. You close a winning trade early out of fear, or you take a bad entry to get back at the market after a loss. Your strategy isn't the problem. The bottleneck is human execution. Institutional giants solved this execution problem decades ago. They pulled the human out of the loop and handed the daily grind over to banks of computers that never get tired, never feel greedy, and never revenge trade. For a long time, building a tireless, emotion-free execution machine required a computer science degree and a multi-million-dollar budget. It was an advantage kept strictly behind closed doors at elite firms. By 2026, faster cloud computing and intuitive visual programming languages have collapsed those barriers. You no longer need a massive infrastructure budget to automate your entries and exits. Success in the current landscape depends on a trader's ability to take a manual trading idea and translate it into a machine-readable set of instructions. The technical hurdle has shifted from needing institutional access to mastering the logic of translation. The tools to start this translation are likely already on your desktop. MetaTrader and CTrader act as the heavyweights for robust execution, while TradingView's PineScript provides a highly visual, accessible starting point for drafting your rules. Coding a strategy means taking a fuzzy human idea, like buy when the trend looks good, and forcing ruthless mathematical specificity onto it. A computer needs absolute, unambiguous instructions to function. This diagram shows two moving average lines. Manually, we buy when the fast line crosses the slow line. To code this, we isolate the crossover. The computer finds where the fast line was below the slow line previously, but is above it now. You don't have to invent a completely original mathematical model. Automation is about taking the edges you already trade manually and defining them so strictly that a machine can execute them without you. Warning tone. Executing trades flawlessly means nothing if you don't control the downside. Fortunately, algorithms excel at instant, emotionless position sizing. This dynamic chart demonstrates how a programmed algorithm handles risk. Even as the overall trade size blocks shrink or expand based on the stop-loss distance, the specific portion representing your total account risk stays locked at exactly 1% for every single trade. Once the logic and the risk controls are coded, you have to prove the strategy works before risking real capital. Backtesting runs your new rules against years of historical market data to see how it would have performed. A beautiful backtest result can be dangerous. The most common mistake is curve fitting, which means tweaking your algorithm's parameters until it perfectly matches the past data. A strategy optimized only for the past will almost certainly fail in a live, unpredictable market. To solve this, professionals use walk-forward analysis. You optimize your strategy on one specific chunk of historical data, and then you test it on a completely unseen, subsequent block of time to verify that the logic actually holds up. When an algorithm survives rigorous historical testing across unseen datasets, it moves from being a hopeful gamble to a statistically proven edge. Moving a proven algorithm into a live market replaces human error with technological risk. A brief internet outage or a local computer crash can leave an open trade completely unmanaged. A safe deployment starts by moving your algorithm off your home computer and onto a virtual private server, or VPS. This provides a dedicated, remote environment that keeps your code running 24 hours a day without interruption. From there, you run the algorithm on a demo account for several weeks to catch any logic bugs. When it's finally time to go live, you start with the smallest possible microlots. Your goal here is to verify the technological plumbing, not to make a fortune on day one. The retail environment in 2026 offers increasingly accessible tools, from visual builders requiring no coding to basic AI integrations gauging market sentiment. The traders who succeed will be the ones who continuously learn and test these new resources. Automation enforces a level of discipline that is nearly impossible for a human to maintain. This process isolates the trader's emotional flaws, leaving only the pure mathematical execution of a tested market edge. FXNX has the resources to guide you through this exact process. You can explore comprehensive guides on PineScript and MQL5, download our free strategy template, and open a zero-spread demo account to start testing your first automated strategy today.